Okay. Hello, everyone. How are you? Good day. Uh, good nights. Good morning. Good afternoon. Good evening. Wherever you are in the world. Hello from South Africa. Okay, let's get into the update today. Hello to my Canadian friends, American friends. I know that we're in different time zones now, but I do find a lot more peace where I am right now. So if you're looking to get away from the madness, come down, come hide with me in the bottom of Africa. It's beautiful here. You'll love it. It's away from all of that nonsense that's going on around the world right now. Okay, yeah, there's no wars here. It's not perfect, but it's a lot better than a lot of what the news is showing me from an international perspective. Into today's market update, guys, I want to start off by showing you why we need to have cycles and quadrants, because market structure is super important. And the reason why it's important is because, okay, I'll get to that in a second. I just want to say real quick that I guess, yeah, it's on the market structure topic. We need to ensure that the rest of the cycle is taken care of. Okay, so explain differently. If imagine that I gave you a shoebox, and with that shoebox, I gave you a string that was too long for the shoebox, and I said you've got to zigzag the string across inside here. So let's just draw a string, I suppose. So longer than this, but there's your string, and you need to make zigzags with the string, 5 tops and 5 bottoms within here. Okay, and what you did was perhaps started very aggressively, maybe kicked in and went up high, and then over there and over there, and then kind of like over there, maybe like there, but then you had a little bit of string left, but all this space. And let's say, for example, instead of going too drastically anymore because you're running out of string, you do that. All right. This is what the market has to deal with. All right. It's got finite amount of energy per cycle, and it's got to organize through the chaos the right amount of energy so that its shoelace, I suppose, can start and finish neatly without being too wild. I don't know if that makes sense to you, but let's give you another example. So, in case you see it in the market, say for example, you were more conservative up front with your piece of string, started kind of low, and a little bit of this, a little bit of that, and then you had all this extra string left, and said, okay, cool, I'm going to get more exploratory or more adventurous now, and you start doing this. That's more or less what the market's doing as well. Okay, so if you have a consolidated and ranged area up front, then expect to see some more vigorous action to follow. That's just how market cycles work. Okay, so what we're seeing over here is that we've had quite a ranged start, and this was Easter weekend's fault. Then it kind of very quickly dipped down and then jumped back up into range, and now we're back into like this ranged area over here. So before I continue with what I started off with, I just want to say that I want you guys to be kind to yourself. As let's say, for example, you got in over here, you would have seen price your account go up a little bit, or your position increase in profit, then go into loss, then slight profit, then slight loss, then slight profit, then either hit a stop loss, or if you just open up and prayed that it'll come back, you'll see quite a significant loss. It would have been a very difficult period. Then let's say it would have got back to break even, and you've thought that you had your position open for this long, so why not keep it going a little bit further? Then you would have gone into some nice profit, and then back to break even. So what I'm saying is that when the markets operate in this way, which is obviously different to what we've been seeing with regards to the strong market up moves back here, it's important to be kind to yourself, because this is just how markets operate. It's got to balance itself out. It can't just be vigorous and animated at all times. It's just it gets exhausted and so on. And it is a bit more difficult to not only forecast during consolidating and ranging markets, but also to keep your mind sane, where your account, as much as you want it to skyrocket, as we've seen happen over here, it's just not doing it over here because of that energy principle. And I will get into higher cycles and all that kind of stuff at a different time. But very similar to the shoebox experience that we've just gone through, the zigzags were pretty vigorous up front. And now we're seeing it flattening out a bit because it's got to responsibly position its um, allocated energy for its cycle on the high frame, and everything. Like all of these principles work across the different frames, and somehow magically they work together. It's pretty fascinating, in fact, how they do. So that's a bit about market structure and something I'm always aware of when I look at the market spacing. And the reason why the significance of that exists to this now move is because if we look at the cycle over here, I was obviously working on this my left hand chart. If I take these boxes away, which by the way didn't get as far as I thought it would be, but we did get beyond the price, which is fine. And this is obviously the anchor points to the move up now. But looking back over here, I'm just going to take these distractions away. If you didn't have market structure, if you didn't have the cycles, if you didn't have the knowledge that MTOPS gives you, then, and you're just a regular Gann trader, you could have just put this Gann tool down and kind of make sense of it, just freehand. And it's pretty convincing that it looks as if it's the correct market structure. We've got the kill zone interaction hugging quite nicely, so the resistance holding it down. It jumps off this line, it gets resisted over there, it comes down this second arc. It does some weird stuff over here, then not perfectly, but it gets back to the 1/1, and then it launches up arc 4, hangs out here at the 1/1 and arc 5. So that's pretty like convincing, like, oh, that's super cool. This is how it operates. This is how this Gann is sitting in for this move. But it's wrong. It's not how it operates. You got to know the full structure, right? The market structure, time forecast, oscillator, price projection, and so on to get correct market structure, because the transitions of the previous turning points are super significant to what happens next. So this would be wrong. All right. The rest of the setups would suffer because a uneducated or unskilled Gann trader, and I'm not being derogative, I'm just saying like it's pretty intense, like how markets operate. It took me quite some time to figure it out, but once I got it, I saw the importance of how everything else doesn't operate. And again, even Gann traders, and Gann is like pretty advanced. I forget how nuanced it is and beyond rational thinking, and kind of mystical it can be seen and so on. But even the Gann traders who have gone all through all of the other strategies to realize how badly the strategies are when it comes to providing long-term results and all those sort of things, and eventually get to the powerful workings of Gann. Even within his work, it's very, very difficult to try and get the correct understanding of where the highs and lows need to happen. And this would be wrong. I mean, it's crazy to think that, but it's wrong. And the reason why it's significant, once again, is because it affects the rest of the cycle for this 1 to 8 trade chart. Now, the reason why that looks so convincing, just by the way, is because we're working with multiple frames, higher frames. So what's happening over here, I can maybe adjust this a little bit better so it fits nicely and so on, but I don't really care to do that because I'm working with trend on the higher dimensions, and that's what's more important to me than it interacting at the exact right places. But what the shape over here is doing is more often than not what's happening on a higher frame. So it's super important to know the distance of where to plug in the start of your cycles, to have your quadrants, and then have everything interlinked together, which is something that Gann hasn't showed his students. That's something I had to discover, and so on and so forth. So super. Once again, I know I'm saying super important a lot, but my brain is kind of tired from all of the late night coding that I'm doing, and all the problem solving I'm faced with every single day. So even talking to my family is a stretch sometimes because of how tired I am. So anyway, please excuse me if I mumble and so on. All right, so that's the correct structure, and it's only because we have the power of the rest of the strategy that we actually get to have this correctly said. And this is not by happenstance. This is all in line with what the strategy teaches, the amounts of turning points per cycle, the location of those turning points relative to the cycle, and all of the components that make up good market structure. All right. But yeah, so I didn't really get to perhaps yesterday's distinction, but you could see over here through the third party verified posts that when price was back here, I said I was going to get into this range. It got into this range from a price aspect, from yeah, like the number, the price, the y-axis aspect, but it turned in sooner than I anticipated. But that is because of where it interacted over here. So just notice where it stops. It'll probably be this 1/2 line, and then you'll see it stopping on the same kind of area over here, but just sooner than anticipated because of where it stopped over here. So let's go for it. Pressing the play button, you'll see it stops over there, the 1/2. Hopefully it's not too small on the cell phones. But over here, it will transpire. I mean, it will transpose. No, I don't know, whatever. Do the same thing on the lower frame, but relative to it instead. Okay, so it came in earlier, but that's the reason it came in earlier because it stopped on that line. And then it's going back up. But what's important to note is that it was going down, and it happened within obviously the range. But that's irrelevant because we don't do counter trend trades. Let's just show you the transition for the next move. Wow. Okay. And more talking. Let's go. I'm going to take a break for myself because my brain's tired. And I say hello to all our new friends and family, I think. Cool. Thanks so much for the boost, guys. Tracer, boost, Tracer, boost, Tracer, boost. Thanks. That's awesome. Thanks for the comments. Thanks for the awesome love over here. Brilliant stuff. Excellent. Okay. Welcome to you guys. Unfortunately, I don't get to see your names, but hello to your handles. Okay, let's get into the final structure of this. I think we might have a bit of time for me to answer some questions based on what the VIPs have been chatting about inside the groups. So I'll get to that in a minute if we do have time. But for the time being, we're going to just set this up. It's still in kill zone. So just waiting for this confirmed 20 points. It's pretty convincing that it is in. Yeah. Okay, so now what we need to do is just work with probability and just see where the time will the market should move across to. What's important to note is the trend that it's in. It has to at least break this high. So it will get above 73,000 by the look of it. When it happens is kind of, as you have seen, up to the market itself. So whether it be somewhere there or somewhere there, it's up to how it wants to move across. It looks pretty lazy and tight here on the higher frame, and of course, as I explained, it's got to be responsible to the entire cycle itself. It can't just go up and down. It has obligations to fulfill, and then also the time frame above this has got obligations to fulfill as well. So as chaotic as the market seems, it's actually this divine being that blows my mind time and time again. and how beautiful it is. All right, so I'd say somewhere up here is what you're looking for. Again, if it happens there or if it happens out here, it all depends on how the market wants to do it. And if you are looking for that next level of precision, you can go down to the lower frames where there's the cycles that exist within the quadrants. So if you're on a lower frame, the 32 minutes, that'll be your 9, 10, 1, 2, 3, 4, 5, 6, 7, 8, actually 9 would have been there. There would have been 10 into 1. So the cycles exist, operate in the exact same way that they do over here, and it can scale it down and you can scale it up, and that's why MTOPS works on all markets and on all time frames, depending on what you need it for. If you need it for long-term investing or medium-term investing, I'll work for that. Oh, this is some shameless self-promotion. So buy the videos, basically. But yeah, if you need something on day trading, high frequency trading, it works there. It works everywhere, and it works across all markets. And not many strategies can say that. Some strategies will be applicable to cryptos. Other strategies will be applicable to the same person, the same trader, to like stocks or to oil or to commodities, whatever, equities and indices and all the C's. But this does, you don't need different strategies for different categories or sectors or markets. It's all the same thing. This is based on divine knowledge, energy, frequency, and vibration, and cycles. So you don't have to worry about it only working in Bitcoin and nowhere else. This works everywhere, and again on all the time cycles, as explained. Okay, so I'm just going to go to Telegram real quick, and I promise to answer some questions into video. Well, I've got, I think, about 3 minutes to do so, so I might have to speak a bit quick. So let's go. So Dan spoke last night about the stop loss, and I say that because I was kind of looking at the message board at 12:30. Whilst the guy was doing some late trading, my time. All right, there's been so much text that I can't actually remember even what it was I needed to talk about. But I can start about market makers and stop losses. I don't really believe too much in market makers and stop loss hunting. Reason being is because we've got cycles and we've got the movements along the trajectory lines, which always make sense ahead of time, or after the fact. So if you look at market structure for every other cycle, and you just do market structure work, you'll see how divinely positioned everything is. Every arc, every fan line, the way that the Gann circles interact prior to that lead up, it's very neatly done. It just seems as if there's market makers and exchanges doing tricky stuff like stop loss hunting and such because of the of some random wicks, but it's never random going backwards. So don't believe in market makers. Don't believe in the silliness that other guys get caught up because they don't really know how to trade the markets. That doesn't exist. I always suggest that you go back to working with energy, energy, frequency, and vibration, and just understand that there's, with the planetary aspects and numerology and how everything comes together in electromagnetic universe, all responding to different gravitational pulls and different periods of cycles throughout the year and so on. I would rather lean into kind of the quantum / science thinking rather than the human exchanges trying to do stuff. I know everyone's excited about Bitcoin halving and so on, but like no one really thinks about how much money it takes to move price in Bitcoin. It's a lot and a lot of money. So you can't really have an exchange hunting a stop loss. You can't really have one power play anymore because the price of Bitcoin and how much it takes to move the market is huge. So that's why you got to start thinking about the way that planetary aspects interact instead of people pushing things up and down. Anyway, that's all the time I have for today, guys. Have a great day forward, and I'll catch up with you tomorrow. Ciao for now. Hello, puppies. Yes, my God, most beautiful face. You've got